Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you are all having a great day. I am the Vortex Trader, and today we are going to be discussing a breakout strategy that we can use on GBP USD in the 15-minute time frame around the opening of the London trading session. So, without further ado, let's jump right into it. Right, guys, so I'm going to be taking you through a few trades and showing you how I go about trading this breakout strategy that usually occurs around, if not on, the London opening market. Right, the time as soon as the London trading session begins, this is when we would look for setups. All right, so let me just take you through a few that I have been testing out. Let's start over here. Which date is this? All right, around the 18th of October. Okay, now these vertical lines on my chart represent the session breaks. You can find any indicator on TradingView. Just type in session breaks and you will see something similar. You will have these vertical lines which will show you when the London session begins, then when the New York session begins, then when the Asian market session begins. Right. So this is what we are looking at. We are looking for price that has formed some sort of support or resistance zone that has formed overnight during the Asian session. Now, wherever you are in the world, this will determine how you trade this setup. As long as you are awake for the London trading session, then you will be good. So for me, the Asian market occurs very late at night into the early hours of the morning. This is not when I am around to trade, and I prefer trading the opening of the London session, right? So I look for a certain range of support or resistance, a zone that price has been respecting while I have been sleeping, okay? Watching for price to come down and hit certain zones repeatedly, all right? Then when I wake up, I look for these zones to break, right? And I only look for them to break once the London trading session opens, right? So for example, here's an example. We have the Asian trading session being very, very flat, coming down and hitting this support zone quite a few times. Now, I would rather, people would say, why don't you extend your support line right here? Because price clearly came down lower. Yes, but I would rather price go through the support line, right, and then come back up into it, because I would rather want price to push through it, right, because this gives me more taps. If I push the support line down below, I only get a couple of taps. But if I push it up higher, right, we have more taps. One tap around the zone right here, another tap, another tap. Yes, we broke through it, but still in the Asian range, so it's fine. Came back up, right, came back down again, retested it, bounced off of it. So this is clearly a line of support, right? Then, once the London market opened, we can see this big red candle, right? And this setup occurred on the actual opening 15-minute candle, the actual candle that opened up the London market. This is when we saw this setup present itself. So what happens is the candle breaks through this previous support zone, closes below it, right? And this is where my entry will come. So I would enter with a market order, or I would enter with a stop order a couple of pips below the close of the breakout candle. My stop loss would go a couple of pips above the top end of the breakout candle, in this case above the top of the wick, and I would always aim for a risk to reward of 1 to 2. All right, now that is how I like to trade this particular setup. Now we can see that had we waited, now straight away, look how close price got to hitting our risk to reward of 1 to 2. It did not quite get there. Price carried on throughout the day. Now this is a game of patience into the next evening, and we can only see in the next day, price came down and completely reached our target. Right. So this is how we do it, right? We had another example the following day. We can see that this vertical line represents the London opening. We can see this support line, support, support, support. Look at that red candle there, bounced off of it nicely. And then once the London market opened, in fact, this candle happened 15 minutes before the London market opened, but the breakout was true enough for me to take the setup. We can see we could enter with a market order right there. I got in just a little bit higher because, this is scalping on the 15-minute and every second counts, right? These candles do not look the same. As soon as you try to click sell, once the candle closes, the candle could be a couple of pips higher on the next candle. It could be a couple of pips lower. So you do have to be quick. Keep your eyes on the screen. Keep your finger on the mouse or on your keypad, whatever you use to initiate those buys and sells, right? And we can see that we got in our stop loss a couple of pips above the top wick of the breakout candle, the candle next to the breakout candle, and we aim for a risk to reward of 1 to 2, and we can see we got that quite nicely. It doesn't happen straight away. We had to wait most of the day. This target was hit. If the London session opens around 9 a.m., this target was reached closer to 5:30 p.m. So make sure you are on the right side of the trend. If the market is trending, you want to be on the same side as the market makers and the institutions. Right, here is an example of one that I tried to take which did not work, right? And let me show you why. Let's pick up this support line right here. We can see that this breakout candle, here is when the London trading session opened. We can see about 2 hours later, we saw this bearish momentum. We saw quite a large candle. However, it did not take out this previous line of support, right? Support, support, and we could see this was our Asian range, right? So it would have been silly to take this candle. It wasn't a breakout candle. We could have taken the next candle, but look at the wicks on that next candle. That is clearly indecision in the market. The market does not know what it wants to do. The wicks are relatively the same size on the top as well as on the bottom. Right, so if we would have taken this, this is clearly a loss because what did price do? Came back up. Right, now we can trade this with the New York session as well. If we see the setup work on the New York session, then we can take the trade as well, right? Because here was our range formed during the London session, right? Some in the Asian session, some in the London session, clear resistance, right? Look at this giant wick here. Resistance, right? Came back up, got bounced off of it. Resistance, came back up, resistance, right? Resistance, came back up, resistance, okay? A candle just before New York opened up, we saw this breakout. Yes, and we could have entered with a market order targeting a risk to reward of 1 to 2, and we can see that price definitely did that. It actually went further. However, I will always take my profits at 1 to 2. Let's carry on, shall we? Let's see what else we got. Right, here is another example. I'm going to bring this support line down just a touch to around here, right? We want to get as much taps as we can. Right, now, let's see what we got. Sometimes, as soon as any market will open up, right? The London market, the New York market, even the Asian market, be very, very careful of getting faked out. Because look at here, right? Look right here. This is when the London market opened up. We saw this gigantic bullish candle push up, right? However, it did not take out this zone of resistance. Right here, we could not break through it. Now, there were buyers that were buying that breakout. They were buying this gigantic bullish candle. However, it was clearly a fake out. What happened? Market opened up bullish. However, remember, the trend is still bearish. We came back down, and here is our breakout candle, taking out previous support, which happened about an hour after London opened up, targeting a risk to reward of 1 to 2. We got in with a market order at the close of this nice solid candle. Stop loss a couple of pips above the top of the breakout candle, and there we go. Yes, we could have held on for further profits, This one would have given us nearly a 1 to 5. However, I am not looking for something that gives me 1 to 5 every single time. I'm looking for a system that I can use systematically. I'm looking for an approach where as soon as I see a setup, I take the trade. I know where my targets are. I know what my risk to reward is, right? I know some traders love to trade subjectively in the sense that instead of a systematic approach, or they can blend it, right? You could also change your targets accordingly. However, I like to stick with a strict set of rules and criteria that I've come up for myself by backtesting this particular setup. Right? Let's carry on. Right, nothing so far. Today is Monday. Right, generally we could see some breakouts on Mondays. Let's see. The London session began on this candle right over here. Right now we can see there is not a lot of volatility for GU right now. We are sitting within this support and resistance range. So what I will be doing is looking if once New York opens up, if we see a break below the support zone, a clean break, we could be looking for some nice bearish opportunities. In the same way, if we see a nice break above this resistance zone, we could be looking for some nice bullish opportunities, right? We take the setups as they present themselves, right? We have to take every single setup that comes, right? Because we got to think of trading in probabilities. And generally, when we are setting up and trying to see if a new strategy or setup works, we should take the strategy every time the setup presents itself, and we should trade in a sample size of about 20 to 25 trades, because this will tell us if the strategy is actually profitable or not. So we have to commit to the next 25 trades no matter what, with zero fear and zero emotion, right? Once we have traded about 20 to 25 trades, then if need be, we can tweak the strategy, but we cannot tweak it until that 20 to 25 sample size is finished. All right, guys. And that is how I go about looking at this new GBP USD breakout strategy during the London session on the 15-minute time frame. All right, so on that note, if you have any questions, please go ahead and leave them below in the comment section. If you enjoy these videos, please would you hit that like button, hit that subscribe button, hit that little notification bell, because at some point in the near future, I do want to begin to start going live just before London opens up, so we can look together and see if we can find any setups on GU as well as the DAX, because the DAX, I trade a very, very similar setup. However, I use a moving average for the DAX, right? Yes, the moving average is here as well on GU. However, for the breakouts, we don't really need it. However, for the DAX, I do like to use it. If you haven't watched the DAX videos, please go through the channel. A couple of weeks ago, there were plenty all focused on how I trade the DAX very similarly to GU on the 15-minute time frame, also focusing on the London market open and breakouts that can occur during that time. All right, guys, so on that note, let's wrap up today's video. I want to thank you all so much for watching. And as always, I will be seeing you all in the next one. See you later.